Welcome to Inside the Deal. I'm Suzanne Stevens. With me today is Robbert van Batenburg. Robbert is head of equity research for Lewis Capital Markets. Robbert, we're here to talk about Pfizer's $68 billion bid for Wyeth. And one of the things we've heard from Pfizer CEO Jeff Kindler is that the restructuring that's taken place at Pfizer over the last 18 months or so, making it what Kindler says is a more nimble company, should make integrating Wyeth a lot easier. What are your thoughts on that?
Part of the reason I think is he's concerned about morale at the target company Wyeth. If of course there's chance of too many layoffs happening once the two companies start to integrate, then you have a low morality. You have a lot of quality people leaving Wyeth beforehand, and in pharmaceuticals it's all about human capital. So you do not want your good people to leave, especially in areas like R&D. So by him making Pfizer a more nimble company, it would allow him actually to make sure that, at least give the impression that there's not going to be massive rounds of layoffs. And the other thing is that Pfizer has prepared himself for the inevitable loss of Lipitor, which would already make Pfizer a lot smaller company. So he's been doing this for a year in order to prepare Pfizer for the inevitable decline in revenues.
Well, let's talk about some of the risks of this deal, or some of the obstacles to this deal actually going forward. And one is certainly antitrust. Could antitrust hold this deal up?
There's a small chance. The only thing with the antitrust is that it has to be approved in Europe, in the United States, I think in China, in Australia. So there are different track records. There's different, time schedules for each and every approval. But in general, I don't think regulatory risk is the main issue here.
Certainly, Pfizer's credit rating is an issue. It needs to remain strong for this deal to move forward. What are the odds of that?
Well, they say that the credit rating agencies have already given their opinion. They have been in communication with the credit rating agencies prior to the deal being announced. And, so the credit rating agencies have essentially given their opinion on it. They put Pfizer on watch negative, and then that's it. So if credit rating agencies stay with this at the current level, then there's no reason for the deal to fall apart.
Wyeth's strength, and what makes it attractive to Pfizer, certainly in part, is its strength in biologics. Are there other potential buyers or bidders that could come in for Wyeth?
Well, in the States, not so much. Essentially Merck and Schering-Plough, they can't buy it. They're just too small. Johnson & Johnson would be too much of a antitrust risk because their operator, Enbrel, would compete with the competitive drug of J&J. Humira, you have Abbott as a potential buyer as well, which would also create a lot of antitrust risk. So in general, domestically, you don't have a lot of. The only alternative will probably be Novartis.
So, Robbert, you're pretty optimistic that this deal should go forward. What is the biggest risk to it, or is there a real big risk out there?
Some delay. You're also taking consideration you have a new administration. There's new takes on antitrust. They are much less lenient and much less favorable towards these big mergers. So I think there is a bit of a risk there about what the Department of Justice or the FTC is going to do with respect to these type of mergers. So from that perspective, there is a wild card here.
Robbert van Batenburg with Lewis Capital Markets. Thanks for coming by.
Thank you.
I'm Suzanne Stevens. Thanks for watching Inside the Deal.